What is up, my one viewer? We are at markets that are at an all-time high. The question is, are we going to trade it, invest it, or sit back and wait for it to drop? And so today's episode is really about going back to the basics. If I was to enter the market today, how would I approach building a trading and investing portfolio? This episode is for those of you who've maybe procrastinated or maybe just haven't gotten to the markets, haven't got around to it, maybe had some fear or just didn't have the knowledge on how to get into the markets. I'm going to show you a step-by-step on how you can start investing. Even if it's as little as $20 a month or a week or a paycheck, I will show you how that can return massive returns to you over your lifetime today, and how I'd be approaching kind of jumping in the market. So the first thing that we need to do, well, actually, let me introduce myself. My name is Chris Blom from Blomonomics. If you're watching this, you're a Blomonom economist. And my one ask for you today is my content is free. It is always going to be free. The whole purpose of my channel and my trading channel is to show you how I trade with a public portfolio. I put 10K in there to show you how I kind of approach the markets. But also all the tools I use on this account are all the free versions of TradingView. I use watchlists that are for free through Google Finance. I'm going to show you how to set all those up. The idea is that this is going to be accessible to everyone who wants to take that leap and start investing. If you learn even one thing today, I would love a subscribe, and for me to continue spreading the wealth of knowledge, a comment would be awesome. Just give me, literally type thumbs up in the comment if you learned even one thing. If you want to go one step further, just tell me what you learned, and I think it would just help me kind of cater my content a lot more. So, step one, you have to set up a brokerage account. You need an account to trade stocks in. In Canada, you're looking at Wealthsimple or Questrade. Probably have the lowest commissions that you would be, or fees that you would be paying on your trades. You can also set it up at the big banks. In the US, you're looking at Charles Schwab, Fidelity, Robinhood, and the big banks as well. Set up that account. You usually have to verify your identity and do a couple things. It takes a couple days. And then figure out how much money that you could realistically invest. Even if it's $50 in there, just get some money in that account so you can start to learn how to invest, how to buy the stocks, and so on. So what we're going to look at here on the markets are, we're looking at charts on a site called TradingView. So go to TradingView. If you have a Google account, you can just sign on with single sign-on. Get it set up, and the first thing I want you to do is I want you to click up at the top here. After you go to, you can click on your, I turned on dark theme, so that's all I've done to make it look different here. I've turned on dark theme. I've gone to indicators. I want you to type in multiple moving average and click on this one that says Zen in the Art. Shout out to whoever Zen in the Art is for creating this. Your moving average is going to pop up here. I want you to click on this settings cog. Go to MMA or MA number 1, make it gold with your thinnest line, silver with the thinnest line on 2, bronze, and then purple. I set up those 4 lines. Those 4 lines represent a 10, a 20, a 50, and a 200-day moving average. All we're going to focus on today, we're not going to do anything complex today. I want you to focus on the 200-day moving average, the purple line here. This is the SPX, the S&P 500, which is the largest 500 companies in the US. And I want you to notice the relationship of the stock with the purple line. There's 2 things that kind of affect stock prices. One of them is charting and charts. All investors are looking at these charts. The second is just sort of the macro environment, news, global economics, and so on. And so what is the relationship between the S&P 500 and the purple line? Every couple of years, 2019, 2020, 2022, almost in 2025 here earlier this spring, we bounce off the purple line. Same thing with the NASDAQ. I want you to notice where we are in comparison to the purple line right now. We're really far off it. Think of the further you get away from the 200-day moving average, it's like an elastic band and it snaps you back. Something in the market could give at any time, we never know, and it could pull us back down. And if we were to pull back down today, we're looking at about a 30% drop in the stock market. Could happen. So the question is, do we invest at these heights? Because the simplest way to invest is just to invest in an index, in a NASDAQ index fund or a S&P 500 index fund. You put your money in there, you forget about it for 20 years. It will be up for sure. But you could probably get a cheaper entry point if you wait for it to hit the purple line. So in good faith, I would not be investing my money into these index funds at these levels. I would keep cash on the sideline. Another thing you can do is there's a company called Berkshire Hathaway, which was run by Warren Buffett, one of the most prolific investors of all time. They bought strong, cash-flowing, growing companies. There's a bit of a canary in the coal mine right now because that company has about 30% of their entire portfolio worth of funds, cash, sitting on the sidelines. They're not investing $380 billion right now. The idea is they don't think it's worth it at the level the market's at to be investing. So what they're likely waiting to do is for this, the markets to take a big dip and have a good buy zone, and then they'll inject a lot of that money. So if I would say maybe don't do the S&P 500 and NASDAQ right now, but Berkshire Hathaway could be a better investment because they are kind of putting cash on the sidelines for us if you invest in them, and they'll inject that back into the market. So that could be a way to approach the markets if you're new to and you just want something like a set it and forget it stock to invest in and put $50 in there every paycheck. Could be a good place. How I approach investing is a little different. So you can go to Google Finance for free. You can go to watchlist and you can create new list. And I want you to create two lists here. One of them is the Mag 7, so the biggest 7 stocks in the US, just to keep a pulse on what they're doing. Every 3 months, every quarter, they announce earnings. If their earnings are bad, they tend to plummet and they kind of take the whole market with it. It's just good to start following these stocks, not necessarily investing them, but just keeping a pulse on them. How I invest is I invest about 30% of my money into hard assets. Hard assets, what I would consider a hard asset would be gold. I would consider real estate a hard asset. Some energy companies could be hard assets, or some energy is kind of considered an asset. Bitcoin, I would consider an asset, and so on. And so how I invest is I have silver in here, SLV. I have gold, GLD. I prefer gold over silver. I think if you buy gold, it kind of protects your purchasing power. I truly believe that as the governments, and we can get into this in a different video, but as they debase the currency, as they continue to print and print and print money, there's more money supply, which means the price of assets go up. Assets don't necessarily make you cash flow. They're not Warren Buffett's favorite. It's not like they're sitting here earning you money, but they're protecting your wealth. I forget who said it, but there was some investor who basically said, buy assets and never sell them and you'll become very wealthy. So what I do is I buy a lot of gold. I have rental property. If you can't afford a rental property, not all of us have access to that. We can invest in things like Vanguard Real Estate, VNQ, which is just a ETF, like we discussed, of a ton of different commercial and residential real estate, building companies and so on. So you get exposure to sort of hard assets that way. Another really interesting thing is they're called REITs, R-E-I-T-S, Real Estate Investment Trusts, and essentially I have two here, MAA, and EQR. I actually don't even know. Let's define REIT. What does it stand for? Real Estate Investment Trust. I was right. Okay, I had to second guess myself there. So MMA is or MAA is single family homes. EQR is urban apartments. The nice thing about these is they yield a dividend. So it's almost like you're a part owner of a company that owns rental properties. If you look at like a 5-year chart, we're actually not sitting super high right now. Like it's not that inflated. We're quite a bit down here. We're down about 30% from its all-time high in 2022. You can park money in here. You get exposure to real estate. Every year they pay you almost 5% of your money back in a dividend. You get paid quarterly. And it's like you're a part owner of, whether it's $50, $100, $10,000 of rental properties. So another kind of play on investments. Cool company I found here. I'm not personally invested in it yet, but I will be. It's just called Land. It's a company out here that is just buying up farmland. I think that as population grows, we're going to need more and more food. A lot of the big billionaires are starting to acquire a lot of farmland, and the stock is sitting very low right now. It's at the same levels that it was at in about 2016. 2016. So maybe not necessarily land, but like getting exposure to farmland. Not all of us can afford a farm or want to, be chasing pigs around a farm. But that being said, we can invest in companies that do own farms. So my methodology is about 30% of my portfolio into hard assets, 30% of my portfolio or 35% of my portfolio into stocks, and we'll cover stocks on a different episode here. And about 30% of my portfolio is what I call allocated to swing trading. So I use that money to actually actively create income. I will oftentimes not day trade, so I'm not buying and selling stocks on the same day, and a lot of people do that, and there's nothing wrong with that, but I do more what's called swing trading. I wait for bigger trends, I wait for momentum, I get into the trend, I might hold it for a week, I might hold it for 3 months if it just keeps growing and growing and growing, and I'll swing with the trend. I'll take my profits, and then I'll take those profits and buy hard assets and never sell them. So that's my methodology, is swing trade. Use my money to make money, buy hard assets. If you're new to investing, you don't have to start swing trading. You can just start investing. And if you ever want to just like talk to me, if that's something anyone's interested in, we could always just make a Discord or jump in a Discord call. We can go over, what you have access to, and I'm by all means here to just kind of help my subscribers and my followers just create whatever wealth they can and whatever opportunities they have for them. If you've never looked at a compound interest calculator, super interesting. Can just give you an idea of how much money you can make in the markets if you just let time do the heavy lifting and let your money grow. I forget who said it, but it was something about, it's not about how much money you make that makes you wealthy, it's about how much money you save that makes you wealthy. And so let's start like conservative. Let's say that you can save $20 a paycheck, so $20 bi-weekly. The average rate of the S&P 500 and the NASDAQ since 1957 is about 10.5% compounded yearly. And say you're 25 years old right now, so you have another 40 years before you're 65 and you retire. So $20 a week is giving you about $250,000 at retirement. You probably will, as you grow in your career, are going to have more to invest than $20 every week. So say you invest $50 every week on average. Over the course of 40 years, that's about $100,000 out of your pocket, but you're going to have almost $700,000. So that means every dollar that you save and invest is equal to $7 later in your life. So, that $5 coffee is actually costing you $35. Not all of us have 40 years to invest. Some of us are older, some of us might be getting closer to retirement, and so on. Maybe you have a partner. You're a little more financially stable now. You can each put $150 a paycheck into investing. So you have $300, and maybe you're 35, so you have 30 years before you're retiring. The two of you together are going to be liquid millionaires. How many liquid millionaires are in the U.S.? What percent? Percent of people. About 2%. So this puts you in the 2%. If you're able to invest $300 and be disciplined, every paycheck, 150 from you, maybe 150 from your partner, from when you're 35 to when you retire, you're in the top 2% of wealth. So it shows you it doesn't take a lot. Now I know $300 can be a lot for some of us, for others it might not be a lot, but if you let time do the heavy lifting, if you use your money to grow your money, you can set yourself up and be incredibly financially stable in your lifetime. Some of us have even more than $300 to invest. So I just want to give you some perspective on it doesn't take a lot. Even if you have $20 a paycheck, open that brokerage account, start putting it in there. Feel free to write in the comments if you want any advice. Watch out for all those like stupid scam things in the comments. Thank God I don't have those yet because I'm not a big enough YouTube channel. But just reach out to me directly, and or a financial advisor or anyone else who can help you out there. I'm not a financial advisor, but this is just a passion project of mine. But yeah, I hope you learned something. If you did, write thumbs up in the comments. And then if you want to go one step further, let me know what you learned, and I can start to create more content catered towards that. Tomorrow I'll return with my swing trading video and just kind of show you how the week played out, where the public portfolio is at. I just wanted to do something, a bit of a change up. For example, My brother actually recommended this, and shout out to my brother who just swung trade DSV, a silver stock, for $700 profit, extracted those profits, and bought himself a somewhat hard depreciating asset, Nintendo Switch 2. So shout out Matt for that trade. That was a pretty big trade this week. All right, thanks so much, everyone. We'll talk tomorrow with the public portfolio update. Cheers.